This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, Mathis Connor here with Connor Management Group, and this week we're going to look at the best technology stock to buy right now. Today is Monday, October 20th, 2014, and as you would see on the opening slide, this company is in the communication equipment industry within the technology sector, and we see its 6-month upside potential at 20.0%. Going on to the second slide, we see that the name of this company is called ARRIS Group. That's ARRIS Group Incorporated. Its ticker symbol is ARRS. The industry it's in is communication equipment, and its 6-month upside potential once again is at 20%. On to the quick facts slide. Here we have the business summary for ARRIS Group. Here we go. ARRIS Group Incorporated provides media, entertainment, and data communication solutions in the United States and internationally. The company operates in 2 segments: customer premises equipment and network and cloud. The customer premises equipment segment offers various product solutions, including set-top boxes, gateways, digital subscriber lines, and cable modems, and embedded multimedia terminal adapters, and voice and data modems that enable service providers to offer voice, video, and high-speed data services to residential and business subscribers. The network and cloud segment provides hybrid fiber coax equipment, edge routers, metro Wi-Fi, video management, storage, and distribution equipment for cable providers, and fiber and copper-based broadband transmission equipment for telco providers. The website is www.arrisi.com. That's www.arrisi.com. You can think of it as ARRIS Incorporated. That's what the I is for. So this company is headquartered in Suwanee, Georgia. They were founded in 1969. They have 6,500 employees. The ticker symbol, once again, is ARRS. The sector they operate within is technology, and the industry is communications equipment. The annual revenue over the last 12 months for ARRIS was $4.9 billion. The net income over the last 12 months was $94 million. However, the cash from operations was $482 million. So that's just a noticeable difference between net income and cash from operations. The market capitalization for ARRIS now stands at $3.6 billion. Onto the products and services slide. We basically have some simple descriptions of the services that they provide by who they serve. So, for instance, we have the ARRIS logo. Under cable operators, we see that they provide services for integrated cable broadband, complete voice communications, demand-driven video, cell tower backhaul, targeted advertising, and bandwidth efficiency, among others. To the telco operators, some of the services they provide are bandwidth efficiency, digital home and device management, IPTV, global services, and something they call TV beyond the TV. And for programmers, they provide solutions that they classify as downlink solutions and uplink solutions. So no equipment pictures per se, but those are descriptions of some of the products and services they provide. On to the metrics slide. Once again, over the last 12 months, the annual revenue for ARRIS totals $4.9 billion. Their net income totaled $94 million, and the cash from operations totaled $482 million. On to the operating margins. 2013, Aris's operating margins were 12.3%, and for 2014, they're tracking to increase nicely. They're presently tracking at 18.0%. So from 12.3% to 18.0%, that's a very nice increase in operating margins. On to the valuation metrics. The trailing PE ratio for Aris stands at 12.0, and the forward PE ratio stands at 9.2. So that is a very nice decrease, and means that on average the analyst expects earnings to increase significantly over the next year. The PEG ratio is at 0.5. That's well less than 1. That's usually considered a bargain when you find those opportunities. The price to sales ratio is at 0.7, also low, and tends to suggest it's a name that's presently being overlooked. The price to book ratio is at 2.6, not too rich at all, and the enterprise value to EBITDA ratio stands at 8.2. The recent closing price for Aris was $25.15. The 52-week low was $16.34, and the 52-week high was $35.83. So right now, Aris is about the midway point between its 52-week high and its 52-week low. The 20-day moving average is $27.14. The 50-day moving average is $29.31, and the 200-day moving average is $29.21. So that doesn't necessarily tell you too much, other than suggesting a slight pullback from its highs. The average daily trading volume for Aris is 2 million shares per day. Its beta is at 0.5, so the stock is less volatile than the market. When the market goes up or down, Aris tends to move less up and down as well. The dividend yield is at 0%, and the average dividend payout ratio is at 0%. So Aris doesn't pay any dividends. Onto the price chart. Over the past year, Aris has increased 49.8%. You just think of it as increasing 50%. As we mentioned, the stock is presently at about its halfway point between its high and low over the last 12 months. Right now, the stock is around $25, and it started out a year ago around $16, and it peaked in late July to a little over $34, and it's pulled a little bit back since then. But we still believe that Aris has some upside potential. And on to the summary slide. The financial statement quality for Aris is quite good. The debt that they have due over the next 5 years stands at about $1 billion, and their net profit each year is about $300 million. So you can see that they could take care of that debt quite easily over the next 5 years. The operating margin trend, as we mentioned, has been improving. The price pattern trend has been increasing. The stock's basically increased about 50% over the past year. And our overall market outlook is neutral. While the market has pulled back a little bit over the past 1 to 2 weeks, we don't think that there'll be much more pullback. We just believe that some overvalued names have been selling off. So we don't expect Aris to experience headwinds, particularly one way or the other, as a result of general market conditions. The recent closing price for Aris was $25.15. The 12-month price target is at $30.18, and therefore we see its 6-month upside potential at 20.0%. So some of the other good things about Aris is that they are increasing their presence in Europe and Latin America, and they also have a notable increase in the backlog for their products. So it's for all these reasons that we believe Aris is the best technology stock to buy right now. We hope you've enjoyed this presentation and this has been helpful to you, and we'll talk to you again next week. Take care. Bye. Hi, this is Mathis Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate a thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why this stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Connor Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Conner Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to connermg.com. That's www.connermg.com, or you could go to our website and you can see a presentation that compares Conner Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size was probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to CMG stockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.